All right, welcome back to the program. My guest is joining me right now. Steve Nwachukwu is an investment analyst. Hello, Steve, and welcome to the program. A happy Monday to you. Can you hear me, Steve?
Yes, I can hear you. Are you
Okay.
hearing me too?
Yes, I can hear you. Please, can you just keep that camera steady so that we don't have any interruption? Welcome to the program. Let's get started. What were really the sentiments last week? While we're seeing the bears, dominating the market amidst the earnings coming out, the delicious dividends are being,
Thank you.
yeah, the delicious dividends being announced by companies quoted on the NGX.
To be honest with you, the market last week was rather a bit, the bull dominated the market considering the fact that the 5 trading days of the week, the bull dominated, having 4 of the trading days. But coming back to your question, what has kept the market in a negative mood after all these good releases by these companies? I will tell you for sure that investors continue to adjust their portfolio. They'll look out for stocks or look out for other equities that they would prefer. And having in mind that most of these companies, like what happened last week, we saw the likes of Nestle, the likes of Nigerian breweries, and plus other price adjustments affected the market from the floor mill, total, and NTN. Price of these equities were adjusted for their interim and final dividends. That was actually what reflected in the market last week. We saw the market lose about 39 basis points, which represent about 0.1% decline in the all share index. So the market outlook is also, I will still tell investors to look out for the stocks that has good fundamentals with rich returns on investment, which we'll continue to see most of them in the banking, in the consumer, in the oil and gas sector. So the market still has a very good, bright future.
Do you think that we will see this week, if we will see investors buying the dip this week?
Pardon, I didn't get the last part of your
Okay,
question.
I'm asking if investors will buy these lower prices of equities that we're seeing, that the dip we at least we've seen in the last few weeks, or even since the beginning of the year, because the year-to-date performance of the market is still in the negative territory. So do you think that investors will buy the dip this week?
Of course, that's what an average analyst will always advise investors to look at when the market is going down. Oh,
Oh, okay. It seems we're having a network problem there with Steve Nwachukwu. In case you're just joining us, this is
seeing
Morning
most
Line
of
with
these
Nancy. Okay,
equities
Steve,
that
I
had
can hear
a
you.
kind of good run last year.
Okay, Steve, go ahead because
If you can hear me.
yes, I can hear you now. You
Okay,
were
I was
actually
trying to tell you that
freezing
yes,
earlier.
investors will continue to look at for those stocks that has high reach currently at their prices have adjusted. So you continue to witness some kind of buy-in or bargaining power most of these equities within the low price stocks. When I use the word low price stock, notwithstanding that the stocks that are highly priced are most of the blue chip companies, but you still see investors looking towards most of the smaller equity or some smaller cap equities that has a very high potential high yield. So investors will continue to look towards those some stocks that will have a greater returns on their investment. Have in mind that most of these very results released in the second quarter, we are all in their positive. In positive in the sense, both the top and the bottom line, we are all impressive. So these are just the basic things or the fundamentals beyond the management teams of companies, beyond any other the outlook of the economy or the outlook of the security situation in the country. These are the results, the books that the investors are looking at for. Once the top and bottom lines are positive and impressive, investors will always take their money in such stocks. So they are looking out for those stocks that have actually adjusted with prices in the recent days.
Steve, is there any major story you and your colleagues are looking forward to this week that perhaps I'm not aware about? Or I'm not aware, perhaps investors are not aware of, rather. Is there any major story, any major market story that we are expecting, or you and your colleagues are looking forward to? Or it's still same old, same old? Steve, are you there? Or the picture is frozen again? Okay, let's try to reconnect with Steve Nwachukwu, who is an investment analyst. He's trying to give us some perspectives on what to expect this week, how the markets traded last week. But just like you've heard so far, at least in the last few minutes, perhaps investors should take this time to buy the dip. We've seen the Nigerian markets, that's the NGX, down about 1% or more than 1% year-to-date performance. This was a stock market that was the best performing last year, in a pandemic year. Let's try to reconnect with Steve Nwachukwu. Let's quickly take this break, and when we come back, we hope to reconnect with him. Use this time out to connect with us on all our social media platforms. We'll be right back.
If we invest well in infrastructure and we're not distracted and we're focused, in the next couple of years, the story will change.
We need to make ourselves attractive to investors, our own domestic investors, as well as others from the continent and outside.
We have to accelerate Africa's industrialization. We have to make sure that we build our export capacity.
It will interest you to know that every mineral that we have in Nigeria, Nigeria's mineral is always the best worldwide.
Resilience matters. In fact, one of the tragedy of this shock, whether you look within a country or whether you look across the world, is that it will increase the inequality of income, wealth, and opportunity. And that's why it's really important to have a multilateral global response to what is a global problem.
This is Moneyline with me, Nancy Naji, where we keep you up to speed with finance, business, economic, investment, and market information.
Right now, it's because of the personal interest and corruption that's put us where we are today.
And there is price hike everywhere.
It's a global thing, so we just have to keep pushing and being patient.
Your best bet at this time. All right, welcome back. We have Steve Nwachukwu is back online, an investment analyst. Steve, let me ask you a final question before your picture freezes or disappears again. This is part of what that we are suffering in this country. We need to have
that is the technology for
yes,
you.
a seamless internet, for things to move on smoothly. Do you think that the earnings we've seen so far from companies quoted on the exchange has been comforting to local investors?
I think I will answer you with the kind of mix. It's a mixed reaction in the sense that looking at the local operating environment, you're looking at the pressure on
Okay. It seems, Steve, we're still having that network issue with your connection there. Steve, thank you, though, for joining us today. I'm afraid that's the much we can take because of the disruptions that we're having with that network. This next conversation will focus on the toll policy, the new toll gates. In case you don't know what I'm talking about, toll gates. There'll be toll gates back. That's what we will be talking about now.